Namaste. Good morning. So, on the two questions, on the prime question of two people asking me whether I will share this notes, I'll do it at the end of every chapter. That will be safe for you. Okay, you will maintain it. If I send you at the end of every class, then you will not have the track. I mean it. You will not have the track. You will get the notes. I have told you it's yours. Okay, but let's do it at the end of the chapter. At the end of the chapter, if we have PGBP as one notes both for theory and for solutions, it will be helping you. So definitely I will share with you, but please wait. Last class we saw all the disallowance provision. Okay, section 40 and 48, mainly four things: TDS default, income taxes, payment to relatives for in excess of 10,000 mainly. But of course, provision for gratuity also is important. We are moving forward to section 43. We are moving forward to section 43. In that, we have already studied that one aspect of it, which I am trying to consolidate now. Okay. Section 43A and 43AA. What is that? Foreign currency fluctuation. Section 43A and 43AA. Foreign currency fluctuation. Section 43A for assets. Section 43AA for others. What should I do? What should I do for assets? What should I do for assets? Okay. Yeah, exactly. We have written in depreciation cost of addition. We have written cost of addition. In that we would have written. In that we would have written it in depreciation. While writing depreciation for addition, we gave lot of explanation. What is cost of addition? Okay, fluctuation arising between date of transaction and date of settlement should be adjusted with cost of asset. It should be increased or decreased with the cost of asset. Is it visible now? Yeah. For others, it is like accounts, revenue. Okay. Okay, friends. This is also discussed in ICDS. When we come to ICDS, we will discuss about this. Right. The next is the major section, that is 43B, which speaks about statutory dues. Let me split it into two. The MSME segment, let me take it separately. First, the statutory dues. Three branches. Three branches: government, employees, banks, and financial institutions. Okay. Any tax, cess, duty. Any tax, cess, duty. Okay. We are not covering income tax here because income tax is anyhow disallowed. We are only covering other than income tax, customs duty, GST. Okay. Those things are only covered here. Okay. If I am holding an house property as a business asset, municipal taxes will be covered here. If it is held as residential or let out property, it will be covered in IHP. This here, municipal taxes, if the of my office building. Okay, like that. Any tax, cess, duty. Employer's contribution to provident fund or other fund. Employer's contribution to provident fund or other fund. Payment to Indian Railways for usage of their assets. Bonus or commission. Leave encashment. As I told you, now I'm just discussing the part one. Part two, I'll discuss separately. Part one, 6 types of statutory dues. Any taxes duty, employer's contribution to provident fund, bonus or commission, leave encashment, interest payable to banks and financial institution, payment to be made to Indian Railways for usage of their assets. 6 statutory dues. Dues. Okay, a flower bracket in under that for all common provision, where these are outstanding at the end of the year, then the same will be allowed only if it is paid within the due date of filing returns, where these are outstanding at the end of the year. As on 31st March, if these are outstanding, it will be allowed only if it is paid within 31st July or 31st October or 30th November, as the case may be. The unpaid amount will be disallowed, like default rectification provision of TDS. Here also, in the year in which you are actually paying it, you claim the expenditure, whatever was disallowed. Am I clear to you? Okay. So please understand, statutory dues has to be paid. There are only 6 types of statutory dues. Electricity bill payable to state government. I am not paying it within due date. Can I claim it? Yes. It is not. It might be a statutory due under some other law. But income tax law in part 1, part 2 is MSME. So part 1 talks about only 6 types of statutory payment. Taxes duty payable to government, employers contribution to PF and payment to Indian Railways, bonus or commission, leave encashment, interest. Any outstanding contractors bill, any other outstanding audit fees, that is not covered here. Only 6 types of statutory payment. Am I clear to you? Okay. Now for some special discussion in this. The words that is stressed is, it should be, I saw you online. The word that is getting enormous stresses, it should be paid. Actual payment should be there. I have a reason for telling this. Actual payment should be there. My dear friends, my interest is outstanding. My interest is outstanding for a long time. Bank converted the interest into term loan. Bank converted the interest into term loan. Now my liability is not interest. In my books of accounts, I will pass the entry outstanding interest account data to term loan. It would have been a liability that converted into term loan. Can I claim deduction? The word is paid. Again and again, we are the court and the tax law is clear. Conversion of an outstanding interest into term loan will never be treated as payment. Will never be. The liability exists in some other form. The liability exists in some other form. The law says whenever installments are getting paid, Whenever term loan installments are getting paid, claim the deduction. That is only on the basis of payment. Am I clear to you? Okay. Conversion of outstanding interest into term loan will not be treated as settlement of liability. Will not be treated as settlement of liability. Hence, it is not allowed in the year of conversion. However, whenever the term loan installments are paid, deduction can be claimed. However, whenever the term loan installments get paid, deduction can be claimed. Okay. Okay. I converted the outstanding interest. There is an outstanding interest. I issued debentures for that interest. I issued debentures for that interest. Can I claim? Louder? Whenever it is redeemed. Whenever it is redeemed only. Conversion of outstanding interest into debentures or bonds will not be treated as settlement. Only when they are redeemed, deduction can be claimed. This is the recent case law, which says if I convert it into equity shares, I can claim the deduction. Because equity shares will never be settled. It is not like debentures which can be redeemed, term loan which will be paid in installments, okay, monthly installments. Equity shares will never be settled. Okay, convert into will be allowed. Such a conversion is treated as settlement of liability as equity shares. So in very rare circumstances only, equity shares get paid. in very, very rare circumstances, like buyback of shares, okay, like winding up of the company. That's very, very rare. So such a conversion will be. May I? May I? Okay. Now listen. Now listen for one more interesting case law. Friends, I created the bonus entry on 31st March. I created the bonus entry on 31st March. And I'm liable to pay before October 31st. Employees went on a strike saying that they are not happy with the bonus. They are not accepting it. So what I did is I transferred it to an employee trust. It's a non-revocable trust, which means the money will not come back to me. Whenever the strike is over, it will go to the employee. I transferred it to an employee trust, non-revocable trust. The money will never come back to me and it will go to the employee. Fortunately, the strike got over by 15th October and bonus was paid on 2010 from the trust account. Department contended that it is not going from the company's account, so I will not take it as expenditure. But the court held, no, it has been transferred to a trust. And then comes the most important word. And the trust has paid within due date. Had the trust, by interpretation we understand, had the trust not paid within 3110, still the company cannot. Just because I am transferring to an irrevocable trust, it does not mean my liability ceases. Payment is the criteria, except equity share. Except equity shares, payment is the criteria. Is the class clear? Shawsun Chemicals Limited. Yeah, whenever you are paying, you can. That is the default rectification provision is like TPS. Are you following, Mikey? Are you following, online friends? Now to next important discussion: employees' contribution versus employers' contribution to PF. Okay, okay, shall I? Employees' contribution should be paid within the due date mentioned under the respective law. For that, it is not due date as per filing of return. It should be on a month basis, not even what is outstanding on 31st March. Okay, on a month to month basis, this needs to be paid within the due date mentioned under PF or any similar law. So it should be paid on or before 15th. It should be paid on or before 15th. Where it is not paid, where it is not paid, the unpaid amount will be treated as income in the hands of employer. Where it is not paid, please remember the provision. You will treat it as income in the hands of the employer. Whatever you have not paid within the due date of the respective law, because you would have passed the entry salary account debit, which has a component of PF. Salary account debit, 2 employees, 2 TDS, 2 PF. So it is there as an expenditure. I will treat that unpaid amount as income. Okay. Subsequent payment will not rectify the mistake. In other words, expenditure cannot be claimed if it is not paid within due date of such law. Never can you claim. From there, if what you should have paid on 15th, if you pay on 16th also, you cannot claim. That's what we report in our 3CD. Okay. This is the most important aspect of or difference in employee and employer. Employees should be paid within the due date of that law, not paid, treat it as income. Never after that you can claim the expenditure. Employer pay before the due date of filing returns. Unpaid will not be allowed as deduction. Expenditure will be disallowed. Okay. And later payment will be allowed. That's the biggest difference. Now, now I'm progressing to the next discussion, that is MSME payment. Though we are saying MSME, MS only covered. The provision is not for medium. It is only for micro and small sector. Okay. What does the law say? Again, they are considering it as a statutory due. Pay it within the due date. Otherwise, I will not give the expenditure in the year of incurrence. I will only give the expenditure deduction in the year in which actual payment is made. Section 43 H MSME payment. Where payment to a micro or small enterprises is outstanding on 31st March, the same needs to be paid within the dates mentioned in the respective law. Am I clear? Am I clear? Okay, right. Now the question is, what is the due date? Okay, it depends upon two things. Where there is agreement, where there is no agreement. Where there is agreement, date mentioned in the agreement or 45 days from the date of transaction, whichever is earlier. Where there is agreement, date mentioned in the agreement or 45 days from the date of transaction, whichever is earlier. Where there is no agreement, 15 days from the date of transaction. Am I clear? Am I clear? Please read both 43B or full 43B1. It is, I'm very sorry, it is 43BH. Read statutory payments and MSME ones. May I? May I? Yeah. To your practical notebook. I mean, page number 26, question number 30. Hari, an individual, carries on the business of purchase and sale of agricultural produce. He borrowed a loan from State Financial Corporation and Indian Bank. He has not paid interest as detailed under. State Financial Corporation, financial year 23-24, 24-25, Indian Bank. Both the entities restructure the interest into a loan facility to be repayable in 60 and 45 installments respectively. For the current year ended, 5 installments of Indian Bank and 3 installments of SFC are paid. Compute the deduction that can be claimed under 43P. Read through. First, some baseline notes. According to section 43B, actually in accordance with section 43B, these interests would have been disallowed in the financial years 23-24/24-25 as they have not been paid within the due date. So it would have been already disallowed. It would have been already disallowed as we have not paid within the due date of our respective law. I mean, as per the income tax law. Okay, within the due date of income tax law. Am I clear to you? Okay. Conversion of outstanding interest into term loan will not amount to payment. Hence, such conversion will not have any impact. However, however, when the term loan gets repaid, deduction can be claimed for the repayment made. Friends, three installments of SFC are paid. SFC is converted into 60 installments, of which three is paid. Indian Bank 30 lakhs is converted into 45 equal installments, out of which 5 installments are paid. Eighteen. Any doubts? You're clear? Okay. Goods purchased from a MSE. Actually, I should not have used ME. On 1st March amounted to 40,000. In the following circumstances, discuss on the allowability of the same. Case A, where there is an agreement to pay within 35 days and payment is made before 5th of April. 35 days will fall on 5th of April. I have paid before. So the whole of the expenditure will be allowed in the financial year 25-26 itself. Okay. Where there is agreement to pay within 35 days, that is on or before 5th of April 2026, and the same is paid within the set time, the whole of the is it clear? Okay. Case B, where there is no agreement and the payment is made up. No agreement means you should have paid before 15 days, 16th of March. Even if you have paid on 31st March, no problem, because it is disallowed and allowed in the same year. Disallowed in the year of incurrence and allowed in the year of payment, which happens to be the same. But here it is paid on 2nd April 26, disallowed in the financial year 25-26, and only allowed in the financial year 26-27. I think this is the toughest disclosure this time in 3CD. Yeah, this is becoming a very big challenge for many. where there is agreement to pay within 35 days and the payment is made on 7th April. And the same is paid on 7th April 26. Then expenditure is disallowed. Case D, where there is an agreement to pay within 50 days and the payment is okay. Where there is agreement, then payment needs to be made within agreed days or 45 days, whichever is earlier. In the given case, agreement is for 50 days, but payment needs to be made within 45 days. That is on or before 15th of April. Case E, if it is paid on 20th April. Any doubts? Any doubts? Online friends? Any doubts? Question number 32. The following details pertains to statutory dues. Specify the amount of deduction that can be claimed in the current year. Employers' contribution to Provident Fund, March 26, 16 lakhs, paid in May 26, we can claim it. Employees' contribution, it cannot be claimed. It should be treated as income. It should be, because it should be paid before 15th April. Okay. Municipal taxes on office building outstanding paid in November, you cannot claim. Municipal taxes on house property will never be entering this chapter. It is dealt with in house property chapter. Interest on term loans to bank 11 lakh paid in December, you cannot claim. Bonus to employees 21 lakhs, 15 lakhs paid in September. Balance 5 lakhs and 1 lakh, you cannot claim. You might write it back in 26, 27. That's for books of accounts. For income tax, you cannot claim. On further analysis, you understand that there is a bonus for the year 24-25, 17 lakhs. 11 lakhs was paid in September and 6 lakhs was paid in December 25. This would have been disallowed in the last year. Since it is paid, it should be allowed in this year. Employers' contribution to PF paid within the due date of filing returns under IT law, hence allowed. Employees' contribution needs to be made within the due date specified under the respective law. Since it is not paid, the same to be treated as income. Subsequent payment will not be allowed. Clear? Municipal taxes for office building. Tax is a statutory duty even in house property. You cannot claim this because house property says paid before 31st March. Otherwise, in the year of payment only, you cannot. In net gross annual value less municipal taxes paid. It should have been paid within that year. Pakka? Just confirm me the total. Shall I move on? Shall I move on? Okay. So 43B, very, very repeated adjustment, especially employer-employee contribution. Highly repeated adjustment is 43B. Back to theory, no? I'm not dealing with this section here. Okay. I will do it along with 50C. Okay. There, sale of immovable property held as capital asset. Here, sale of immovable property held as stock in trade. Same provision I'll deal with there. Okay. Okay. Then there is some construction contracts and the interest on NPA. Okay. Yeah. Then there is some construction contracts interest on NPV, which we will deal along with our ICDs. There it is being specifically said. There it is being specifically said. That time I will deal with it. Okay. Am I clear to you? Right. So in our travel, we started with splitting expenditure into three. In our travel, we started with splitting expenditure into three. Expenses expressly allowed by law, 30 to 37. There is also a 38 of proportionate. Okay. Like car used by a professional for residence and personal and official purpose, like that. Disallowance 40 and 40A allowed only on the basis of payment 43B. Am I clear? Okay. Right. We started this entire provision by saying that there are two sections which speak about income. Apart from section 28, which has given us a list, we are also focusing on section 41, deemed income. Section 41, deemed income. Two following branches. Section 41, deemed income. May I? Okay. Any expenditure, losses, deduction claimed earlier, now recovered, shall be treated as business income. Any expenditure, losses, okay, deductions claimed earlier, now recovered, will be treated as business income. Can you give me an example? Very good example. Okay, the best is bad debts recovered. Okay, if it is claimed and allowed earlier, now recovered, shall be treated as income. Okay, okay. Now I will take you to some of the things. Sale value of asset purchased for scientific research. When I purchased it, I claimed it as an expenditure. Remember, I purchased the asset for scientific research 5 lakhs. Entire 5 lakhs was allowed in-house research. Now, if you sell it for 4 lakhs, the entire 4 lakhs is any deduction, expenditure, losses, deduction claimed earlier, now recovered, will be treated as income. Suppose I sell it for 6 lakhs. 5 lakhs is PGBP, 1 lakh is capital gain. Because 5 lakhs only I would have earlier claimed. That's why section 41. Okay, whatever was claimed earlier will now recovered, will only be treated as income. That's why in various places we are written over and above license value, over and above asset value, it goes to capital gain. Where electricity company follows straight line basis, the balancing charge will also be treated as am I clear? Okay. What is bad debts? Which will not be recovered. Okay. I sold goods and my debtor is not paying me, I claim it as bad debt. Am I clear to you? I'm unable to recover. Okay? Accountancy treats you as a glorious person, as if you will go and knock at the door of creditor and say, I want to pay. Only your debtor will not pay you. What if you don't pay your creditor? Is there a term in accounts? You cannot say bad creditor. It is like confession. Income tax law is not ready to believe that. Write back of trading liability. Write back of trading liability. Non-payment to creditors. any outstanding expenses not paid. Okay, it should be written back in the book of accounts. Am I clear? Okay. So remember, write back of trading liability. Okay. So what is section 41? Any expenditure losses deduction claimed earlier now recovered, and any trading liability which was written back shall be deemed to be business income. That is why it's a deemed provision, deemed to be business income. In this, the one of the interesting discussion is waiver of liability by the bank. Okay, waiver of liability by bank, three falling branches. Term loan waiver, working capital loan waiver, interest waiver. You take working capital normally for assets. Buy a house, I pay in multiple installments. I buy a machinery, I pay in multiple installments. That is known as term. Am I clear? Okay. What can we do, Archana? Term loan waiver. Is it an income? The law says adjust it with the cost of the asset. You purchased an asset for 80 lakhs. Bank funded 70 lakhs. You paid up to 60 lakhs, not paying the remaining 10 lakhs. Cost of the asset becomes 70 lakhs. Okay. The waived sum will be reduced from the cost of the asset. The waived sum will be reduced from the cost of the asset. This working capital loan is mainly for stock and debtors. Will be treated as income because write-off of trading liability. Working capital loan is a trading liability. Somebody from online tell me about interest waiver. The treatment will be the same as working capital loan because It is a expenditure, which is an expenditure is getting waived, so it should be treated as income. That's what you say, Lija, right? Any other answer? No treatment. Very good. Why? That I will extend our answer. This would have been already disallowed because section 43B says if interest is not paid within the due date of filing returns, this would have been already disallowed. So is the liability existing in income tax books? No. Waiving that will not make any difference. She is right. No treatment because I have already taxed it. What Lija said, it should be taxed. The answer is it is taxed. Not in this year, waiver. In the year in which I have incurred itself, you have taxed it. When the liability itself is not there, what is there to forego? Principle of Maya. Not there, foregone. Both are not possible. Both are not possible. Okay. So, interest waiver. This outstanding interest would have been disallowed in the year of incurrence as it is not paid within due date. Waiver will not have any impact as it is already taxed. Read through. Am I clear? Am I clear? There's no special question on this. So leave it. Am I clear? Okay. Just a rough discussion. Don't worry about this. Don't worry about this. These are not a very dynamic section, but I want you to understand special provision for computing cost of stock in trade. Suppose an asset is converted into stock in trade. Okay, cost of asset plus cost of improvement plus expenses incurred will be, if you have revalued the asset, then that revaluation should be ignored. Asset converted into stock in trade. This we will again study in capital gains chapter, where I will give you this. I told you I will cover it along with section 50C. Construction contracts will be ICDS 3. where I will cover this. Okay. Okay. Interest on NPA, whenever you recover, it is taxable. Am I clear to you? That is section 41 for you. I'm going into the dynamic section 44. Section 44 is divided into two: administrative, presumptive computation. Administrative is further divided into two: maintenance of books and tax audit. Okay, the purpose for which we are all doing this course. Okay, right. Let us do the administrative part. Go to presumptive computation. Okay, I want to tell you that if you take any book, any books or any magazines or anything, there is something known as lighter moment column or jokes column, etc. Income tax is also a book. Okay, there are some very good jokes available in income tax. In your inter, I would have told you, or you would have studied this thing called children education allowance, rupees 100 per child, as if that is the best. 100 rupees per child, and that too you are restricting to maximum 2 children. That's a very good joke. With 1,200 rupees, what education? So is section 44AA. Maintenance of books. Who has to maintain? If you are a professional, if your gross receipt exceed 1,50,000, you have to maintain. I don't understand why for an annual. Okay, which means 15,000. That too gross receipt, not even the profit. Gross receipt exceeds, you have to maintain books. If it does not exceed, the next line says maintain sufficient records. Okay, so this is just for your writing. The dynamic section is a tax audit section. This is just for your understanding. How do you distinguish uh, these two things, professional and other business associates? How do you distinguish? Now, please understand this. Not only in this section, all through the law, I will tell you in various places. If they use the terminology gross receipt, they are speaking about professional, because we always account for on receipt basis. None of the professionals account on accrual basis, because after service there is always a risk of receiving the fee. So always professional account for on receipt basis. Companies, other entities, the law itself makes it mandatory to go on mercantile basis. Okay, that's how you see the distinction in this section, in 44AB. In various other sections, you are going to see this, where the gross receipts exceeds rupees 1,50,000 in all three preceding years, or estimated to increase in the current year, books needs to be mandatorily maintained. Am I clear? Okay. After writing this, just strike it off. Don't even read for your examination. Not even an inter student, I will ask them to do it in examination. Friends, friends, here professional is a very small column. I want a longer column for business. Okay, professional is a very smaller. If the gross receipt exceeds rupees 50 lakhs, if the gross turnover exceeds rupees 1 crore, however, what is that? What is that? The biggest relief given? Huh? Yeah, very good. Yeah. We take out on you again, Lija. What is unapproved modes of payment, otherwise than by approved modes of payment? Good. Okay. I'll now ask you one more thing so that we keep remembering all these things. What is meant by succession? That's what is merger. I take your answer. Amalgamation, demerger, conversion. Three types of conversion: sole proprietor to company, partnership firm to company, and company to LLP. Anyhow, that here I'm only speaking about otherwise. However, where the receipt otherwise than by approved modes does not exceed 5% of total receipt, payment otherwise than by approved modes does not exceed 5% of total payment, the limit is 10 crores. The limit is 10. Am I clear? Okay. So professionals 50 lakhs, and business associates 1 crore and sometimes 10 crores. In both the cases, there is something common about our mandatory audit provision. There is something common about mandatory audit provision. Okay, where assessee fails to declares a lesser income than presumptive computation. Okay, when you come to that section, I will tell you. Now, some points. Audit has to be performed by a member of ICAI, and report of auditor should be submitted along with form 3CA, 3CB, and 3C. 3CD is a questionnaire which the auditor has to answer. Okay, you all will be under the belief that after becoming a chartered accountant, you need not answer anything, right? The department, both MCA and income tax department ensures that you answer more questions without any choice. This is what is the case and the Gujarat High Court judgment, but this is for this year. We are doing for the next. May I? May I? Now I'm taking you again to this, where the receipt otherwise than by approved modes, payment otherwise than by approved modes. We never said only revenue receipt or revenue payment, all payment. I would have even received share capital. Take all receipts. It is not P&L account, it is cash book. Okay, and take all the receipt and compare 5%, 5% in each. Read through, let's go to a question. Page number 28, question number 33. Preeti is carrying on textile business and the turnover is 9 crore 50 lakhs. In the following cases, she seeks your advice, your power, on whether the books needs to be mandatorily audited. Case A. if the whole of the turnover is through approved banking channel and so are the payment, where whole of the receipts and payments are through approved modes, then the limit for mandatory audit under 44AB is 10 crores. Actual turnover is less than 10 crores. Hence, audit is not mandatory. If 90% of the turnover is through banking channels and 10% through cash, 1 crore will be the limit. Okay. Receipt otherwise than by approved modes exceed 5% of total receipt. Hence, the limit for mandatory audit is only rupees 1 crore. Actual turnover is more than that. Audit is mandatory. If 95% of the turnover is through approved banking channel, 5% through, okay, receipt otherwise has not exceeded 5%. If whole of the turnover and 90% of the expenditure, okay, payment otherwise than by approved modes has exceeded 5% of total payment. Question number 34. The total receipts and payments of an individual carrying on business is provided. Specify whether he is bound to get his books audited. So we understand his turnover is 5 crores, which consists of 20 and 480. Assets, scrap sales, interest, miscellaneous. Payment, purchase of goods, other expenses, assets, income tax, and investment made. Read through. Shall we? Okay, start together. Seven? 33, right? Percentage of receipt otherwise than by approved modes as compared to total receipt. 33 divided by 755 into 100. 4 point. 5.05%. So audit becomes mandatory because payment has exceeded 5%. The turnover limit is 1 crore. Actual turnover is 5 crores. Okay, so audit becomes mandatory. The question gives us two ideas. One, how to compare. Second, when you take the receipt and payment, you should take everything, revenue and capital, investments, assets, sale of assets, everything will be taken. Don't take, it is cash book based and not just P&L based. Am I clear to you? Okay, so whole of the payment should be taken and whole of the receipt should be taken to compare. Okay, that is 44AB mandatory audit. Now, repeating, this 44 is divided into two. One side is administrative provisions, two things, maintenance of books, but the most important is mandatory audit. Mandatory audit is a questionable area. Another time is presumptive computation on the basis of assumption. Income is computed on the basis of assumption. Okay, that is what is this presumptive computation provisions. This is to facilitate small people not to maintain books and all. Declare a percentage as turnover and you can no questions will be asked. Not even disallowance provisions will apply. If you declare that percentage, later you find 43B not paid, tax not deducted, no issues. No disallowance provisions will apply. Presumptive computation. three falling branches. Use the margin space also. That will be better. Okay. Small business associates, professionals, goods transport operator, not owning or owning not more than 10 vehicles. Okay, first I'm going to do 44 AD now. Okay, if the gross turnover does not exceed rupees 2 crores, if the gross turnover does not exceed rupees 2 crores, then you can opt for presumptive computation. However, where the receipt in comparison, okay, directly we'll write where receipt otherwise than by approved modes does not exceed 5% of total receipts, then gross turnover up to 3 crores qualify. Only receipt condition here, not payment condition. Income 6% of turnover by approved modes and 8% of turnover by unapproved modes. Am I clear? Okay. In the second case, if the gross receipt does not exceed 50 lakhs, however, yes, Kanu? Suppose suppose my turnover is 1 crore 50 lakhs. Am I eligible for presumptive computation? Kannu? Yeah. My turnover is 1 crore 50 lakhs. Am I eligible? Yes. I need not say 5% and all. Up to 2 crores, I need not see anything. Out of this 1 crore 50 lakhs, 50 lakhs is by I received by unapproved modes or otherwise than by approved, and 1 crore by approved modes. My income is 1 crore into 6% plus 50 lakhs into 8%. Thank you, Kanna. Okay. I have written that the assessee should not own more than 10 vehicles at any time during previous year. It's not at the beginning or end, at any time during the previous. Heavy commercial vehicle means 12,000 kgs or more. Gross weight of rupee 1 per kg per month. So I have a vehicle of 14,000 gross weight. 14,000 into 12. Irrespective of whether I am using it for whole month, part of the or part thereof, means even if I have used it for 1 day, even I have purchased and not used it, this will be computed. Can I, friends? Can I? So this is my income computation under presumptive. Now under the table for some common points. All expenses under section 30 to 37 are deemed to have been allowed. All expenses under section 30 to 37 are deemed to have been allowed. That is, you cannot claim 8% of the turnover less depreciation, you should not start. Okay. And remember, in this point, one crucial point is since unabsorbed depreciation is mentioned in section 32, the same is also deemed to have been allowed. Okay. Where assessee wants to declare a lesser income, then what happens? Books needs to be maintained and mandatorily audited. Books needs to be maintained. Up to that, it's also okay. And then comes the provision of it also has to be mandatorily audited. 3CD will come for this. Okay. In a casual expression, the department was asked, why is this maintain books and prove the profit is okay? Suppose the assessee's turnover itself is only 80 lakhs and he don't feel that it is 6 lakh 48%. He want to declare only 4 lakhs. Why are you asking him to main audit? It is enough if he maintains books, for which the answer, the assessee should feel it is better to pay tax than audit. Somebody's mic is on. Can you mute it? Can you? Okay. Am I clear? Okay. Only the last installment of advance tax is applicable in case of section 44 AD and 44 ADA. For 44 AE, all installments applicable. So 234C will come only for 1 month in the 44 AD and ADA, not for 44 AE. Assessee has to opt, actually, once assessee opts for presumptive computation, he needs to follow it for next 5 years. Where he opts out, then he cannot re-enter for another 5 years. Shall I switch it on for some time? Am I clear? There is a lock-in period of 5 years. You cannot re-enter. Read through. Let's go to a practical question. Mr. Praveen engaged in, I'm in page number 29, question number 35. Mr. Praveen engaged in retail trade reports a turnover of 1 crore 98 lakh 50,000 for the relevant financial year. His income from the said business as per books is 11 lakh 20,000. All transactions are carried out by account payee or approved modes. Retail trade is the only source of income for Praveen. With that, we are supposed to answer, is Mr. Praveen eligible to opt for presumptive computation? If so, determine his income. Income 1 crore 98 lakh 50,000 into 6% as entirely by approved modes. 11 lakh 90. What will be the income if 50% is by banking channel and 50% by way of cash? Income 1 crore 98 lakh 50,000 into 50% into 8% plus 1 crore 98 lakh 50,000 into 50% into 6%. You are understanding this right, Lija? That is when 8%, when 6%. May I? In case he does not opt for presumptive computation, what is his obligation? The actual income as per books is 11,20,000. Correct? That's what it is said. Okay. This is lesser than presumptive computation, where assessee wants to declare a lesser income, then he needs to maintain books and get them audited. Is it clear? Okay. In case his turnover is 22 crore 98 lakh 50,000, out of which 12 lakhs is by unapproved modes, specify the provision and income. Where turnover, okay, right, let's start like turnover otherwise than by approved modes as compared to total turnover. So that is nothing but 12 lakhs divided by 2 crore 98 lakh 50,000, okay, into 100. What percentage it comes to? 4.02 percentage. Since it has not exceeded 5%, since it has not exceeded 5%, 44 AD can be claimed up to a turnover level of 3 crores. Am I clear? Okay. Since I have not exceeded 5%, my limit for 44 AD will be 3 crores. Income 12 lakhs into 8% plus 2 crore 98 lakh 50,000 minus 12 lakhs into 6%. Profit as per books is higher, so better to go for presumptive computation. What is the due date of filing under both option? Okay, to this question, to the next question. The answer will not change. Part B. It is from the date of purchase of asset, not from the date of putting the asset into use. Do this, please. Am I clear? Okay. Alpha Cooperative Bank amalgamated with Beta Cooperative, not presumptive, just on 1st December. Take your time, take your time, take your time. Thank you, Kunal. So this is presumptive computation. 44 AD, sometimes they have asked. Okay. AE, in a firm question, one adjustment, or in an individual question, one adjustment. He also owns a vehicle. Like that, it can come. Okay. So it is not to be ignored. Just one other question from our material. Alpha Cooperative Bank amalgamated with Beta Cooperative Bank on 1st December. Depreciation 240. VRS compensation paid 360. Compute the amount of deduction that is available. Where succession is during the course of the year, then both entities are eligible to claim the benefits on a proportionate basis. That is effective usage period. +31 plus 31, 62 plus 28, 70, 90 plus 31, 121 days. Correct? Here 365 minus 121. 1 lakh 60, 438. How much? What is the split? What is the split? No. Ah, no, something else. Parvesh, Maitli, this is 1/5 only is allowed. We should not distribute 360. What is allowed is only 1/5. This is amortization. Okay. According to section 35 DDA, this can be claimed in 5 equal installments. Allowed in FY 25-26, 3,60,000 divided by 5. 3,60,000 divided by 5. 72. 72,000, which needs to be distributed as 244 is to 120. 132. Okay, very carefully that part has to be done. This will be, again, we will be repeating somewhere else also. It is not the total expenditure that is allowed. Whatever is allowed should only be split between them. Okay, the remaining will be carried forward by the way. Five, 7, 0. May I? May I? So this is how it has to be done. We have completed all the provisional aspects of PGBP, starting from 30 to 44. On Sunday's class, we are starting with ICDS. We are starting with ICDS. We will do all the 10 ICDS as notes, and then go for comprehensive working. Okay. Meet you on Sunday morning. All the best, friends.